Yeah, good evening, wonderful Tax Academy members. You are welcome to class. We are moving on again on Professional Taxation 2, Tax Audit and Assurance. Glad to say, Tacho, the anchorman. This week, we are going to handle planning of tax audit and investigation, planning of tax audit and investigation. This is our fourth series, week 4.
Okay.
We have taken introduction to tax and investigation, then tax audit and investigation principle part 1 and part 2. So this morning we are taking planning of tax audit and investigation. So this is the topic for this morning. Planning of tax audit and investigation. So learning objective will be that at the end of this topic, you should be able to know the sources of taxpayers' financial and business information. You should be able to know that. Examiner can ask you. You should be able to know the various standard books and records required for tax audit exercise, books of the taxpayers, book to be kept. If taxpayer prepare a financial statement, those figures supposed to emanate from books, supposed to emanate from records. So you have to check those records and compare to the financial statement submitted, whether they tally or there's nuance in their existence. Then you're supposed to understand the characteristics of effective tax plan, then how the purpose, know the purpose of planning tax audit, understand the advantages and disadvantages derivable from a well-prepared plan, know the meaning of taxpayer profiling and the basic contents, then explain, analyze, and interpret various ratios as well as limitations in the use of the ratio analysis. You must know the ratio analysis. Some of this ratio analysis is tied to tax. So some of these ratio results can give you a kind of leading, can give you a kind of information as per whether the taxpayer is operating a scheme whereby he's using it to reduce his liability or not. So you should know the various ratios tied to tax. Then understand what is tax audit process, know the basis for selecting cases to be audited for tax audit purposes. So it's loaded for you. Explain the procedure before and during the initial interview. They know the process of gathering information. So for this topic, this is what you expect to know. And your examination is not far from this page. It's not far.
It's loaded.
It's not far from this slide. So when you know them, you'll be able to tackle any question. No question will come outside the purview of these learning objectives. So take note of that.
Loaded.
So we move on to sources of taxpayers' financial and business information. So number 1, source of information, the record you request is the audited account. Audited account and or management account. That's management account that is not yet audited, depending on the case may be, or as the case may be, for the last 6 accounting years, including the current year. So if you are auditing for 2023, you collect the past 5 years report and add to it, making it 6. So another thing is general ledger, costs ledger, if any, cash and bank books, and chart of accounts for each of the financial year mentioned in one above. So Another one is rent schedule for each of the accounting years in one above, plus photocopies of withholding tax receipt. Photocopy of withholding tax receipt, then rent schedule. Another one is dividend paid and received, and bonus shares schedule for each of the accounting year in one above. Then interest and discount paid for each accounting year in one above. Banks and other financial institutions. Then schedule of directors' fees and other emoluments. Schedule of directors' fees and other emoluments. Schedule of all banks and payment vouchers. Schedule of all bank vouchers and payment vouchers. Those are what you need. Pay as you earn, payee salaries, allowances, gratuities, and benefits in kinds. Then the following schedules to record are required. Monthly payroll in the alternative, copy of individual pay slips for each month of the year in item 1 above, and the monthly summary. And B,
individual pay slip. Wow.
Yes. The monthly journal voucher or debit credit advice. So 9, development levy deducted in respect of company employees with photocopies of receipts from the State Internal Revenue Service. That means if you are carrying out tax audit application for State Inland Revenue Service, then list of the company branches in the states, then photocopies of the director's tax clearance certificate, director of the company, then photocopy of the company's certificate of incorporation, then secularization. Secularization might mean correspondence between the company, the minutes of meeting of the board of directors. So those are what you need. But what you need will determine the type of audit that you are carrying out. So if you know the type of audit you are carrying out or the kind of audits that is assigned to you, you go straight to the point and select a particular source. You might not need all though they link themselves, they have links to themselves. But then if you are auditing a payee, if you are auditing payee for state inland revenue service, just go straight to all these salary related items. So it has nothing to do with revenue, it has nothing to do with revenue or cost of sales and so on. So you can go straight to salary related or payroll related items and ask for them. So you might not need to ask for all this something. Maybe schedule of director's fee can be related to payee audit. Then okay, schedule of bank and payment vouchers. Okay, that can be related. So that is how it is. So that you will not end up collecting bogus items. So still on sources of taxpayers' financial and business information, we move to standard books to record required. Standard books to record required. These ones are sources of information that you can get. But these are the books of account that you can demand from them as audited financial statement, again, management accounts, end of year trial balance. Monthly trial balance could be called for where necessary. You call for their chart of accounts, you call for their general ledgers to transcript listings, you call for their sales and purchases day books, call for their cash books, petty and main cash books, you call for their sales invoices, purchases invoices we received, then forex through importation documents if they are into importation. So if we are calling for forex importation documents, what do you want to prove here? What do we want to prove with this document?
We'll learn it today.
Okay. So what you need to prove is a kind of input or output tax for value-added tax.
Okay.
So if you are auditing for tax or VAT remittance. So if you call for forex importation documents, that one will give you an insight into input or output tax that you use in computing the VAT. Then companies adjustment journal voucher file, auditors adjustment journals, payments. That's these auditors adjustment journal is the journal of the auditor of that company. The auditor, you have collected audited financial statement, so you can also demand auditors as adjustment journal from them. So payment voucher for bank petty cash, company bank statement for all its banks, subsidiary books and record, fixed asset register. So if you are looking for fixed asset register, that means maybe you are auditing capital allowance computation, you are auditing tax credits granted and other stuff. So that is where you can get it, this fixed asset register. So those are the books that you can request for in the course of your audit.
Wow.
Do
Hmm.
you have any questions so far?
No, it's understandable.
Okay.
Just like you said, all the books may be linked later.
Mm. So we move to general consideration, nature of business, industry, business cycle, and tax compliance history. So when you do that, but this one you would have done it in your office. You would have done it in your office. When you are talking of general consideration.
General consideration.
When you are talking of general consideration, you should be talking about nature of business, or nature of business, nature of business of the client. And you talk about industry, where this client operates. Then business cycle.
Nature of business is different from industry.
Yes. Tax, I'll come now. Tax compliance history. Then other relevant information. So when we talk of nature of business, you need to know, is it a trading company? That company, is it a trading company? That company, is it a school? Is it an NGO? Is it a manufacturing company? Is it an oil and gas company? So you have to know the nature of business. Is it an aviation company? So that's what you look at after selecting the company for tax audit and investigation. So you need to know the nature of their business. Then the industry, when you know the nature of business, you know, assuming the company is a bank, you know that banking is their nature of business. Then you now talk of industry. So which of the industry in the banking sector are they operating? Is it the microfinance bank industry? Is it development bank industry? Are they operating in the mortgage bank industry? Are they operating in the commercial banking industry? You get my drift now? So that is it. So when you pick the nature of business, you can still break it down into industry and industry to sub-industry so that you can compare note with what other companies in that industry is doing, the kind of tax they are paying. So you can compare. It can help you in your consideration or your findings. So you move to business cycle. Business cycle is the accounting year. The accounting year and the tax year, taxation year. So accounting year and taxation year is different. So the business cycle will help you to determine the accounting year, which will in turn help you to determine the taxation year. You know, when they started the business, they are not likely to pay tax immediately. Is it not true?
Yes, yes.
But determination of taxation year will be hinged on the accounting year of the business or year of commencement of business. That is the business cycle. Year of commencement of business will help you when did they start the business, and it will help you when to start collecting their tax, or even if that we are talking of if it's a new company, a newly incorporated company of within 3 to 5 years or 6 years. But if it's a company that has been existing, so the business cycle will help you know when is their year end and when are they subjected to tax. So that will help you. Then you move again to tax compliance history. Tax compliance history. So you check, are they run foul of tax laws before?
Have they been paying well?
Are they been paying well? Are they been paying well, or is there any argument or any litigation with them? Are they stubborn? Are they making their tax declaration well? So those are tax compliance history. So because anybody that have smooth history might likely not have tax issues. But if it's a company that is always having hiccups, back and forth, quarrel with the revenue authority, and so on, you know that that is a red flag for tax audit and investigation. And before you even get here, something might have led you to pick them for audit. Because it's not all the company that you can you can audit. They are numerous. They are numerous and it involves resources. So for you to select those that you think that they are not paying completely, or they are stubborn, or there's no tax enhancement from them, so it really will take time for you to be able to select them. So for you to select them accurately. And because at times when you select some, at the end of the day, you might not see anything with them. So what is the point of wasting time to do the audit? So these are the general consideration: nature of business, industry, business cycle, and tax compliance history. So I've been able to explain that to you. So when we move to audit and investigation, we move to audit and investigation. When you talk of staffing and logistics, when you talk of staffing and logistics, you talk, I mean, when you talk of, let's say, when you talk of staffing, you talk of logistics. So for staffing, you know, we were talking about general consideration before. We were talking of general consideration. So this general consideration, which has to do with nature of business, industry, business cycle, especially nature of business, industry, maybe tax compliance history. Those three, you pick those 3 points: nature of business, industry, tax compliance history. That will help you in audits through investigation, staffing, and logistics. So the nature of business will determine the type of staff you will push into that audit, because you will not just you will not just assign it to any other staff. You assign it to staff that have expertise in that industry,
that area of specialization,
that nature of business, and so on. Then that is as per staffing. Then for logistics, the nature of business will also determine the logistics that is required. If it is a trading company, or how many branches do they have across Nigeria? So that will help you to put the logistics into place, do the logistic budget. So how many locations do they have? How many branches do they have? Are you going to be involving in flights? You know how much flight is costing now. So how many staff is involved in this audit? What categories of staff will be flying? What category of staff will be on the road? So the hotel accommodation, what category of staff would lodge in Suzuki Hotel, and at what rates? So those are the logistics. Then transportation within the town, or long distance transportation, transportation within the scene or within the location, and so on. So there's a whole lot of things that involve in staffing and logistics. So, but the general consideration that we have considered will really help you in fashioning out this aspect of the audit. Did you get my drift?
Yeah.
Okay. So we move to preparation of tax audit and investigation programs. Preparation of tax audit and investigation programs. So an audit plan is the specific guidelines to be followed when conducting an audit. So when you do all these general consideration, nature of business, selection, and everything, the next thing for you to do is audit plan or audit program. Fashion out an audit program. Fashion out an audit program. There's nothing you do. If you do events today, you want to do wedding, there's a program now. If you want to do ceremony or launching or whatever type of Owambe that you are doing, they will do a program. So if you don't do a program, is a kind of a guide that tell you from 10 to 15 minutes, this is what should be done. from so cutting of cake, from so chairman's remark. So program is like that. Audit program and investigation, audit and investigation program is similarly like that. So you want to do any occasion, you draft a program. So an audit plan is a specific guideline to be followed when conducting an audit. So it set out direction for the audit, as I said, describe the expected scope and conduct of the audit, also facilitate the development of audit program. It enables the auditor keep time at a reasonable level because every task, every activity is tied to time, it's tied to duration. It will only take you 3 days to do this audit. So for 3 days, what will you be doing? So when will you write your report and when will you submit it? So it enables the auditor keep time at a reasonable level and avoid disruption of the taxpayer's business. So you are not to go to taxpayers' premises and stay there forever, because the presence of auditor, be it tax audit or whatever audit, is an inconvenience to the taxpayer. It's an inconvenience to the people of they are always afraid. So these people, they have come. I remember I've been in an audit assignment in a place, in an organization. The head of the department was after the pre-meeting, preview meeting, the following day when the audit started, the lady was nowhere to be found. She was not coming. Was not coming to the office. For you to see how people are afraid of audit. Though he has already tutored, there's nothing I needed that I didn't get to. He has already tutored he has tutored our subordinates on how to answer me and what to provide. But he was not around. It was when the audit was about finishing, he would just come in the afternoon. Like the audit is finishing today or tomorrow. You see him in the afternoon. See in the afternoon, the show face, you spend like 2 hours and go back.
What will happen will happen.
So I'm just telling you what audit does to some of these people. So that is the thing. And at times it might just be fear, or it might even be of what they have done, and maybe they are afraid or all those. So that one is left for them. So it also enables the auditor to establish any critical areas which particular attention should be focused. It is done at the beginning of the audit once necessary information needed to prepare it have been obtained from the review risk assessment and intelligence work carried out. It is a strategic document for the audit. It covers audit risk area, personnel, equipment, financial budget, commencement and conclusion dates, and other logistics requirements. I've explained the logistics and staffing for you. Its preparation is usually supervised by senior audit staff and endorsed by the leader of the audit team. So that is preparation of audit and investigation program for you. So still on it. What you should also do, every tax audit must be properly planned in this regard. The following steps should be taken. So we've talked about audit planning. Then what are the steps to be taken in the plan? What are the steps to be taken in the plan? You have to set up an index. Set up an index for the folders as follows. So create folders and set up an index. So this might comprise multiple audits that you want to carry out. We are talking as if we are working in the Inland Revenue Service now, or state, Federal Inland Revenue Service or State Inland Revenue Service. You create a file, an index file for individual audits, then audit completion checklist. You have to establish audit completion checklist. It's part of your plan. Then final audit reports How is it going to look like? Maybe the sketch, the skeleton, or the draft, or whatever. Then planning, summary of taxpayers' background information. So A is audit completion checklist, B is final audit report, C is planning. Then under planning, you have summary of taxpayers' background information. It will be there. Background information extracted from taxpayers' file in FRS office. So that background information, we've talked about the general concentration slide we look at. So you can get the background information there. And the audit team, the team members that will be involved in a particular audit. No, FRS might have a lot of audit, multiple audits in a year. So they have to assign their staff to each of these audits. They have to form teams. So that is done in the audit plan. Then time and expenditure budgets. Expenditure budget for each of these audits. You have to put it together and know the time it will take for these audits and the expenditure it will go up. Then tax audit memorandum. Memorandum is what gathers all this plan into one document. Tax audit memorandum gather all these plans into one document. So you hold one document that will give you a guide. Then D, we talk about job administration. So when we are talking of job administration, we are talking about audit commencement checklist. When are you to commence? When are you to end? Then instruction and FIRS reviews, time control, time reporting sheets, then actual expense incurred, that is the cost of the audit, notices and correspondence with the taxpayer, you'll be writing mails and so on, correspondence with other agencies if necessary, then correspondence with taxpayers, bankers, and etc. Then commentations checklist. So those are the steps to be taken in the planning. I hope you are following.
Yeah, I'm with you.
Okay. So E, we talk of tax audit work program. A, we talk of job review points. At what point will you be reviewing the job? The senior person will be reviewing the job done. Then G, tax computations and taxpayers' returns. So the tax computation have to be looked into. The tax computation of the taxpayer have to be looked into. Then the team have to recast or recompute the tax returns and see whether what the taxpayer computed is correct or not. You have to recompute, then look at the shortfalls or the loopholes and correct them and derive the tax due. In H, review of auditors' work papers. If there was a previous audit on that taxpayer, you have to review the working papers used for that for the audit of that taxpayer. Then I audited another account. Yes, we have talked about this. It's surface again. Tax status report and tax competitions. Yes, we talked about that. Tax status report is where is that taxpayer? When last has he paid? The one he has paid, did he pay correctly?
He did pay correctly. Okay.
And the balance sheet and the profit and loss account, yes, that one is needed. That was one of the major documents. The working trial balance, the revenues that sells, the expenditure of the taxpayer, payroll, treasury activities, when we talk of cash and all that, then inventories. So those are the things you look into when preparing tax investigation program or audit program.
Okay.
Yeah. Mm. What happened?
No, it's just getting the paperwork needs to be gotten right first.
Yes, that's it. That is why you want to become a tax practitioner now.
The
When we finish grooming you, you should be able to know what to do. You know
the
what to look
paperwork
at.
has to, yeah.
Mm. So
The
those
paperwork.
are the things.
Because from what one is noticing now, to tell you the truth, it would have been better one pass through the ICAN route first.
Yes, because some people are saying taxation. Taxation is a child of account.
Yes.
It's a child of accountancy. There's no way taxation can be on its own.
That's because that's what
Taxation, accountancy gave birth to taxation.
yes.
So that's the thing. But you can still, it's not difficult now. You can still do it.
We'll make it.
You can still do it. It's having the willpower. So still on preparation of tax audit and investigation programs, we are looking into tax audit completion checklist. So tax audit completion checklist. There's a checklist.
Okay.
There's a checklist that's supposed to be put in place that will give you as a guide to know whether what you have done is correct or is up to date, or whatever you have audited is in line with what you're supposed to audit. So tax audit completion checklist is a list of all the work which the tax auditor or the tax team intends to do during the tax audit exercise, in order to ensure a systematic completion of the assignment without leaving any area uncovered. Also, to avoid duplication of work already done. It is usually prepared at the planning stage of the audit, and each work performed is ticked on the checklist until all the work on the list is completed. So see example below. Name of the company, you put it there. So that also the checklist will also determine where the company is, the industry the company is. What I say, you don't have to do bogus documentation. Look at the industry the company is operating. That one will help you to draft the audit checklist. Because what you would need in a company in the aviation industry will be different from what you would need in the company in the banking industry. Though you will still collect the financial statements for the both, but there are some key information that you will not be needed in this one that you need in this one, because they are not operating in the same industry. Okay? So you put the TIN. The TIN is a special identifier of the taxpayer. The TIN is the major thing. If you impute a taxpayer TIN, every other information come out in the platform. So TIN is very important. So you can see the remark. The remark, you can just tick it and just tick.
TIN.
So so assuming that is the TIN number
of the person,
of the taxpayer. So whatever you are looking at can just tick. They don't give you If they don't give you, you understand what I'm doing?
Yes.
Risk profiling report, you have done that, you tick. Audit work schedule plan, you have done that. Proof of tax audit authorization, you have not done that. You have not done that yet. So that means it's a pending job to be done. Then tax audit letter, you have sent it, you tick. Proof of service. When you send the letter, have you served them? Maybe you have not proved that they were served, it was acknowledged. So that is a pending thing to be done, to be followed up. Then files review report, you have not reviewed the file. That's a follow-up issue. Then audit work plan, work schedule for officers, you have done that. You have done your audit work plan for your staff. Proof of the audit meeting, yes, you've done the audit meeting, you tick. Minutes of the audit meeting is ready, you tick. Proof of exit meeting attendance, you tick. Just like that. Minutes of exit meeting ready, you tick. If it's not, you don't untick. Interim audit reports consolidated. Letter of audit findings, reconciliation notification, is it in place? Then proof of service of minutes of reconciliation, proof of attendance of reconciliation meeting, minutes of reconciliation meeting, then proof of service of reconciliation meetings, additional document review reports, letter of intent, then proof of service of letter of intent. So what, do you know what letter of intent is?
No.
Okay. Letter of intent is like the auditee or the taxpayer is intending to appeal what you have done.
Okay.
So that is it. So proof of service of letter of intent, notice of additional assessment signed, then evidence of service of assessment notice, proof of objection notice, if any, then review of basis of objection reports, evidence of post-objection reconciliation meeting, memo on objection matters to HOATC, then proof of post-objection letter FRS position, notice of refusal to amend assessment. So evidence of discharge of disputed assessment, final audit report, case closing report, evidence of payments with portal search report. So these are checklists you put in place so that you know that you have covered ground in a particular audit. You can see that tax audit is not a mere task. So
it's the main thing.
So it involves a lot of input into it. So this is tax audit completion checklist for you. So you through that. Then we move to advantages and disadvantages of tax planning. Everything that have advantage have a disadvantage, no matter how good that thing is. So for advantages of tax planning, we say that it facilitates the allocation of work between staff. Yes, it fast track that. The chance of work being overlooked is avoided. By the time you put on the audit plan in place, you avoid overlap of duties. Then unnecessary inquiries on each attendance as to routine work are avoided in view of this saving time of both taxpayer and tax auditor staff. So unnecessary inquiries. So by the time you set up a team, you know who to attend to what, So unnecessary inquiries and overlap of inquiries is avoided. Because everybody knows straight who to go to straight and obtain information. So in the event of any subsequent inquiry, the actual audit staff engaged on the work may be ascertained. Then a definite instruction are laid down. Junior staff may need less supervision. Those are the advantages of tax plan. There are more than that. You can find out on your own and add more. So these are, in case you say the examiner can ask you to write 10 advantages, so you should be able to write more of it. The disadvantage is that work may tend to become mechanical, variations in the working system of the organization being overlooked. So by the time you overdo the planning, work can be mechanical. It will not allow initiative for team members. So when you overplan, it kills initiative of the team members. So another one is that work may be hurried on in order to complete the required schedule. So if you have set up a schedule, a haphazard job can be done to meet up that time frame that you've put in your plan. So that might be a disadvantage. And at the end of the day, not a good job has been produced. So another one is if work is carried out according to a predetermined plan, fraud may be facilitated maybe to accomplish that plan that you put in place. And at times, fraud too can escape the team members because they are working in a hurry to meet up with the time frame. So they won't do a detailed job. So those are some of the disadvantages. So can you also add yours? This will also go to prove that you understand what we are talking about. You can add in the area of advantages, you can add in the area of disadvantages. Or shall we move ahead?
Let's move on.
Okay. So we move to tax audit evidence. So it will still form part of your preparation for tax audit and investigation program. So what type of evidence will you be requiring? We've seen the requirements, proper books of accounts to be kept. In the earlier slide we took up, is a source of audit evidence. So it's a source of audit evidence. So in the plan, you will know which type of audit evidence do you really require for this audit. So audit evidence consists of information and data that can be verified, relevant to the matter under consideration, and which can influence the auditor in arriving at the conclusion on which the audit opinion is based. So audit evidence has three main qualities, which are, so evidence you will gather even from those books of accounts that you have obtained from them has to be reliable. The evidence has to be reliable. So please take note of that. The evidence has to be reliable, and the evidence has to be relevant.
Relevant.
Yes, and has to be sufficient, and the evidence has to be
Hello?
Are we there? Are you there?
Yes.
Okay. The evidence has to be appropriate. appropriate. So when we talk of reliability of evidence, that means the source of that evidence is correct, is reliable. Though you are obtaining from the taxpayer direct, but did you know that the taxpayer can give you a false evidence? The taxpayer can give you a false evidence. So you have to be sure that what the taxpayer give you as evidence is reliable, is correct, is the correct evidence that they have given to you. And what the taxpayer evidence provided should be relevant. Not that you are looking for payroll evidence. The taxpayer now go and give you fixed asset register. You want to audit payroll, but it's giving you fixed asset. Does it have a relevance to it? So what will you achieve with that? So the evidence has to be relevant to the subject matter that you are auditing. The person supposed to give you pay slips, supposed to give you directors' emoluments or fees. He's supposed to give you a nominal role. He's supposed to give you allowances, percentages of allowances, basic salary, housing allowance. And so that one will help you now to compute whatever you want to compute on payroll tax or payee tax. So if you are handling payee audit, somebody providing you tax, fixed asset register might not be necessary. So another thing that the evidence has to be sufficient. Evidence have to be sufficient. That means that one-legged evidence is not enough. If you are auditing payee, for an example, we are auditing payee for an example, the taxpayer supply you with the payroll document. You know, payroll will comprise the name of the staff, the TIN number, the basic salary, housing, and that and that and that. So that is one leg of it. Then for you to be sure that what they give to you is correct, what further evidence will you get?
You need to re-verify.
From where?
That's the problem.
So what you should do is to request for the bank statement. They have given you they have given you a payroll schedule. They tell you Mr. Sonny Obiere is collecting 300,000 per month. 50,000 is basic salary. 80,000 is transport. 150,000 is housing, and that. So they give you a paper, a schedule on that. Maybe probably they give you a pay slip. So what the next thing is for you, give me the bank statement. So you go to the bank statement, okay, which day do you pay your salary every month? We pay our salary 30th of every month. He goes to the bank statement and check. So near beer, if this total emolument is 300,000 and he check the bank statement and it's 150.
How come?
There's no good. So I'm trying to explain sufficiency of evidence here. Sufficiency of evidence. So one-legged evidence is not enough. At times you can go to prove it in 3 places for you to link up the evidence and make the evidence sufficient enough to push your case further. So that is sufficiency I'm talking about now. Then the appropriateness of the evidence is similar to relevance. It's similar to relevance. Appropriate, that means evidence should be given for what is being audited. And that's a specific thing that is being audited. That is the type of evidence that you will require or you will demand You will not go and demand for fixed asset register when you are not computing capital allowance, or when you are not trying to prove investment allowance, or when you are not trying to prove tax credit. So are you getting what I'm saying?
Yeah.
So if you are proving tax credits or capital allowance, you need nothing to do with payroll or payee evidence. So that's what we are talking about: appropriateness and sufficiency. I've explained that. Relevance has explained that. And reliability, I've explained that. I hope you get the gist.
Yeah, I'm with you.
So still on the preparation of tax audit and investigation program, we are still moving. So we say that the evidence includes all the information contained in the accounting and other records. They have given you records, and we have stated the specific record that is required for you to be collected from the taxpayer. So forming the basis of the financial statement, it is important that the auditor obtains credible and sufficient evidence to substantiate the result of the tax audit exercise through inspection, by making inquiries, direct observation, analytical review, and computations. So we will move into ratios later. I'm just trying to explain what analytical review is. Analytical review is just computation of ratios. So ratio will now give you a pointer to what has happened. So that's what evidence can be used for. Then audit evidence could be obtained in any of the following ways. You can obtain it in an examination of the financial statement and the underlying record. A mere examining this financial statement, you can obtain evidence from there. The examination of the minutes of board meetings. That company has a board and they take decisions, so you can trace it in the minutes of their meetings. Then physical verification of
examination, assets. Okay.
Physical verification of assets. You can do that, you can obtain evidence through that. Examination of tax returns and schedule. So when you check the tax schedule and returns, you can obtain your evidence from there. Interviewing key staff who have some knowledge of the transaction of the company. When you interview key staff, you obtain, you extract information that can serve as your evidence. In gathering information from external sources, you can write the bankers to make certain confirmation, the bankers, the suppliers of that company. You can do external secularization to them to provide information for you. So that information can serve as evidence. Then you can secularize to the subsidiary companies. If the company is a group, you can secularize to other subsidiaries under that group. So information provided can serve as your evidence. You can secularize to external auditors of that taxpayer. The information provided by the external auditor, maybe you are requesting for audit working papers from the external auditors. Those audit working papers can serve as evidence for you. So some of the documents evidence relied on by auditors include some of the documents evidence relied by auditors include confirmation received directly by the auditor from the third parties. So all these bankers, suppliers, subsidiary companies, external auditors, they are third parties. They are third parties in this audit. You know, the two parties involved is the taxpayer and the tax auditor. So if you bring any other person into it, they become a third party. So documents produced by taxpayer which have been prepared by outsiders. We are looking at some of the document evidence relied on by the auditors. So it can be documents produced by taxpayer which have been prepared by outsiders, documents produced by taxpayer which have been prepared by the personnel of the taxpayers, documentary evidence calculated by the auditor from the company's record. So those are evidence that you can rely upon. It's a loaded class, so we are taking it step by step, one after the other. We will definitely get there. So, what is tax audit program? This is a schedule of audit work expected to be performed during the audit exercise on each item of the account, such as income or turnovers, sales, expenditure, purchases, stocks, salaries and wages, fixed assets, and liabilities, etc. It is usually prepared before the commencement of the tax audit exercise. So if you say tax planning or tax audit program, they are similar in nature. You're almost saying the same thing. So the audit work program.
Things.
You said?
They are two different things.
Okay. So,
like you said, tax audit program and tax planning.
Yeah. Okay, can you throw more light on it?
The planning is like you said earlier, the procedures,
the process
laid down procedures to follow.
Yeah.
The process flow. That is the program.
That is the planning.
That's the planning, rather.
Okay. What of the program?
The program is execution of the.
Okay. All right. Implementation.
Implementation, yeah.
Is the program, yeah. So that's thank God you got it. So the audit work program summarizes all the steps required to be taken in carrying out the audit exercise to ascertaining the taxpayer compliance with all outstanding legislations. There are usually two aspects of tax audit which must be addressed in order to respect the taxpayer's privacy. You should schedule the audit or meeting at the taxpayer's place of business. Now you are executing it, as you said, the tax administrator's office or the office of taxpayers authorized representative if applicable. So advantages and disadvantages of tax audit program. So we say it enables senior members of the audit team focus more on the review of evidence. Now you are at the field work, you are implementing them, then gathered as against paying attention to the procedure followed in obtaining the evidence. So it enables the senior member of the audit team focus more on the review of the evidence gathered as against paying attention to the procedure followed in obtaining the evidence. Now you have obtained the evidence. Well, what you do is to implement it, to review your evidence. So that's what the advantages of tax audit program can do. It provides continuity in the audit work. Should there be a change in the personnel constituting the audit team, with new members being able to see at a glance the level of work done and outstanding work to date. So audit program is the ongoing job already done. So it can help new joiners to know where the job has stopped, where they can pick up from. So the audit program can help can help in that direction. Then it provides an avenue for the team leader to allocate his available staff in the most productive and efficient way. So you can review the staffing, as the job progresses. Maybe you have concluded a particular task and the staff there is redundant. You can move the staff to another area needed. You know, we have shown you the audit checklist for those items that you have closed. Maybe if the staff there is redundant, is idle, you can move it to open areas or areas that to be followed up. So that is an advantage of an audit program. It focuses the audit's effort on the core elements of the assignment. The program focuses on the core element of the assignment. As I said, if you are auditing for withholding tax, that is the core area, you should not be looking for value-added tax evidence. If you are focusing on PE audit, you should not be looking at audit of stamp duties and so on. So disadvantages of tax audit program, we say that caution needs to be exercised in the use of audit programs. The use of audit programs in order to avoid making the auditor become mechanical when using standard audit program. Strict adherence to the use of standard audit program may invariably kill the initiative of the auditors, as the case may be. So if everything is over-documented, it does not allow for initiative. Then inadequate preparation of audit program may mislead members of the audit team not to carry out some important procedure. So wrong programming can also bring about haphazard audit job, because members may be misled. So take note of that. So we move to tax audit planning memorandum.
Hello.
Yeah.
Hello.
Are you with me? Are you hearing me?
Yes, it went off a little earlier.
All right. Okay, so we are now at tax audit planning memorandum. The memorandum should contain the following information. The memorandum should contain background information on the taxpayer identification number, TIN, type of audit, taxpayer history of tax compliance, the audit team name and ranks. So approach to the audit and areas of special focus, as I said, is it payee, is it stamp duty, is it VAT? Then note major issues so far identified and how they will be addressed. This is what will be in this memorandum. Synopsis of information and record to be requested from taxpayers. I've listed those records for you. Is bankers and other third parties. This should also include a list of schedule